Good morning and welcome to the Pension Committee meeting. Hopefully we can finish on time today. I know last time we were a bit delayed, but that's really down to you. So any apologies, please, Mike?
We've had apologies from County Councillor Whittle and also sorry, not County Councillor, Councillor Whittle and Councillor Smith.
Okay, thank you. Just one thing I'd like to mention, and Mike will take a list after the meeting. Clearly this time we've sent paper out to everybody. We don't particularly want to do that. Clearly, you know, we want to reduce the amount of paper. So if people can let Mike know whether they're happy to just receive it on the computer and not need a paper copy, you'll make a list after so that we maybe save a few trees. Okay. Disclosure of pecuniary and non-pecuniary interests. Anyone? Nope. Okay. I'd also like to welcome William Bourne, who is on the screen, or will be at some point during the annual report. He's not here. He's waving. Okay. Good morning, William.
Good morning, Eddie.
Right, we'll go on to the minutes. Are people happy that the minutes of the last meeting are accurate? Yep. Can somebody move those, please? Yeah, I'm going to. Just in terms of a couple of items coming from the minutes, we talked about external audit fees in a bit of detail, and since then we've had a detailed letter from Grant Thornton itemising the fees. I didn't want to, well, we've only received it this week. So what we'll do is circulate it to everybody after the meeting. And if you have any comments, come back to us. But I think it gives us a lot of detail regarding the very standards that have now got to be met in terms of audit practice. And I think we're hopefully covered in the budget this year for the relevant fees. So Michael send that out afterwards. I think we resolved regarding the investment strategy statement that a briefing on the post-pandemic impact on the fund will come before the end of 2021. That will be at the November meeting. I'm not sure there's any other issues we've got an update. The item on 19, the update on East Cliff is included in the reports today. And on the performance overview, again, we'll be coming back to the November committee. Okay, anybody else, any issues on the minutes? No? Okay, we'll move on to item 4, which is regarding debt management policy. And I'll let Sean introduce this.
Thank you, Chair. This policy is presented to the committee for approval. It is quite a detailed policy, but the key points to really take from it are that there are a large number of invoices raised through pension fund activity during any given year, and the vast majority are paid and there's no issue. Some do need to go through a debt management process, and what we're doing here is formalising that into a pension fund policy. We largely do follow what Lancashire County Council do in terms of policy, but some adjustments there to reflect the specifics of the pension fund. Most of the debt would relate to administration cases, and I've mentioned the issue around overpayments on death, where in a limited number of cases, it can be difficult to recover those overpayments, and other pension funds also have similar issues as well. Once this is approved, then what we'll do is look to implement it going forwards, and every year we'll report to the committee on the amount that has been written off each year in respect of any errors and adjustments. Thank you.
Okay, are we?
Just a quick question. Is this formalising a practice that's really been undertaken today anyway, or is there a change in this from what's been happening?
Yeah, it is more of a formalisation of what's already happened in practice, so that there's clear roles and responsibilities.
So very small point. This was you said in here, some of the employers are not paying their contributions on time and so on. And so is there anything we can do to those companies, those organisations where they have to pay on account, for example, to stop them getting into debt in the first place?
Yeah.
So something to prevent.
Mm-hmm. Yeah, and what we do is we engage with employers who are in that situation to try and improve the outcome. And generally, the number of cases is very, very low compared to the overall amount of contributions that we get in any period. But it is possible for us to do that, a bit of engagement and improve the outcome, and that's what we seek to do.
Yeah, I mean, they're given plenty of notice after evaluation that they know pretty much 3 years in advance what they've got to pay. So it shouldn't be too bad. Okay, are we happy to approve that policy? Yeah, go on. Oh.
Yes, Eddie, although this may, as Sean has explained, in answer to County Councillor Gina Dowding, that it's a formalisation of what's already happened, more or less. I welcome this report because I think it's important for the committee to know what the debt recovery, debt management policy is and to approve it. It is a lengthy report looking at the length of our appendix and all the detail that are in it and the flow charts, etc. But I have to say I was a bit concerned that it wasn't in part 2 because I'm not sure we should be so public about disclosing what the write-off policy is and all this sort of thing to people who may see this who perhaps may owe the fund money. But we are where we are. It's in part 1 of the agenda. That the officers must have decided that that was appropriate. The other point, a couple of points I just want to mention is that, as Sean will be aware, because he's an observer at the board meetings of the local pension partnership administration board that I'm a member of from when it was expanded a bit more than 12 months ago, representing LCC. By coincidence or otherwise, there was a report there about overpayments and errors that are coming up via LPPA, and part or most of which they may be responsible for. And they were looking at actions to take within their accounts and future budgeting about that. And it struck me, knowing, as I mentioned to that meeting, that this report was on the agenda this morning, that it's important, obviously, for LPPA and the LCPF team led by Sean to be consistent on this, make sure that, especially as you'll see that LPPA is mentioned in this report, including along the flow charts that are in it, that nothing falls between the two bodies and nothing is duplicated unnecessarily in chasing particular debts. And I think for that end, there was an understandable request at that meeting for Sean to send a copy of this report to the LPPA people. So I'm sure Sean could assure us that there is this integration, consistency between the two bodies. And if he could say that, I'd be grateful. But finally, I just want to mention that, again, not surprisingly, our internal audit service of the LCC have been looking at this whole matter, and they came up with something that I think was mentioned in Ruth Lowry's report at the June meeting of this committee, that they have been looking at that, and this may well come up again at the Audit, Risk and Governance Committee at its next meeting next month, which, wearing another hat, I happen to be the chairman of. Thank you.
Thank you. There were a few points in there. So if I just unpack them a bit, we are working closely with LPPA on this. So that hopefully that should provide some reassurance that things will be integrated. And one important thing is that we do distinguish between issues that arise because of administration versus issues that might arise because of, for instance, an employer submitting incorrect data or something like that, versus other instances. So we can manage the process according to what the root cause of the problem is. And then the other point that it's probably worth raising is that there was an audit on this, and the plan is that once we've implemented this policy, there'll be a follow-up to ensure that it's working correctly.
Thank you for that. Thanks a lot.
Okay, I also note the issue about it being in part 2. And I probably agree on that. But are we happy to approve it? Yep. Okay, thank you. Item 5, which is the budget monitoring report. Again, I'll let Sean introduce this. I mean, I've already made some comments on this about us after 3 months showing a variance of 27% in the forecast is somewhat surprising. But we are doing quite a bit of work to try and unravel that and hopefully improve the budgeting going forward, particularly on the fees. But I'll let Sean talk about that.
Yeah, thank you, Chair. So there's the cover paper on the budget, as well as the more detailed spreadsheet analysis in Appendix A. A summary of the key points, really, as a standard practice, based on the quarter's experience, the first quarter of this year, we've looked at the budget and we've made some adjustments to the forecasts to reflect actual experience. Some of the key points: the contribution income, that forecast has been reviewed to take into account potential pay increase, as well as an adjustment that was needed in respect of employer contributions. In terms of investment income, there was an extra distribution that was received this quarter, regarding an asset that we sold during the quarter. So we've reflected that within the forecast. And then finally, I've picked up on investment fees. So there was a variance there. In terms of explanation, really, we've talked about this in previous meetings, but the investment fees are based on assets under management, how much the fund is worth. And we do that we estimate that during the budgeting process at the start of the year through January to March, and project forwards. That's obviously something that is quite difficult to do. And indeed, the performance over the last quarter, as you'll have seen elsewhere on the agenda, is more than would probably have been expected, and that resulted in higher fees that are in the budget. We've also looked at what other funds do in the area of budgeting and estimating investment fees, and do note that there is a challenge. You know, quite a few funds will include an estimate, but they will very much caveat it with there's a difficulty to predict, and it's based on some assumptions regarding the assets under management, and they could be liable to change. So I thought it worth just flagging that point. Thank you.
Any comments, anyone? Okay.
Actually, what I was going to ask, which is about the investment income is higher than budget, which is great. And we can all see later on, it's like 10 billion or something now. I was like, oh my goodness. So it's done really well. So the investment income has gone up, which is great. It's gone up 20 million, looking from 44.8 as the budget to 63 as the actual. But then the fee, and I know Chris and Greg will know exactly what I'm going to say now, is the investment fee is 6 million of that 20 million. So that proportion surprised me, that the fee's gone up. The fee is £6 million more than budget. If you add together the investment management fees and the commission, which I'm guessing the commission is LPPI as well, So it was just that proportion, £20 million more income and 6 million more fee. I was thinking it might have been 10% or 20%, but not 30%, as in the differentiation between, do you understand what I'm asking? The increased income versus the increased fee. It was just, and I don't want to ever complain that we've had to pay more fees because we've got more income, because that's, you know, good, but it was just that proportion, that relationship between the two.
Okay, looking at the fees, predominantly they're based on assets under management, so it's that increase that that then has led to that extra fee, as opposed to the return that was received during the year. I mean, if you need more detail, I could pass over to Chris to elaborate on. And it's probably worth just finally mentioning that the commission and withholding tax item, we're looking into that. We're getting a bit of an advice done on that to see whether we can actually reclaim that amount. It relates to an infrastructure fund that we're invested in.
So the commission isn't LPPI, that's something else. So what is it then?
So that is to do with withholding tax on an infrastructure investment that we have. My understanding is that usual practice would be that because we're a pension fund, we'd be exempt from that tax. However, it was charged to us this quarter, and that's why we're seeking advice to challenge that cost, really, and we can report back on that.
Eddie, can I just comment very briefly on that? I have some sympathy, Jennifer, but it is actually really difficult to do. One thing, for example, what we call income there is not the income generated by the assets, it's just the receipts we get. So quite a lot of that could be capital being repaid, for example. The fees, because I was looking at this in detail, we're doing an exercise on fees. The fees can be plus or minus 50% in an individual 12-month period, depending on performance-related fees of the underlying managers, not our friends or LPPI, but the managers they employ. And it's really, really, because you just don't know, you cannot estimate or guess at when those are going to be paid. You know the hurdle rates, but it depends on the market movement on the day when it would be set, for example. So it's a really, really tricky area. Lots of what you see just wouldn't allow you to come to a sensible conclusion as to what the fee is or should be.
Eric's probably covered what I was going to say. I mean, the thing to bear in mind, the fees to LPP are a very small proportion of the total fees, and most of them are the ones that Eric refers to. That specific withholding tax note that Sean flagged there, it relates to a US investment, and the US tax rules are not always as friendly to UK pension funds as most countries are. So there's some work being done there. That's an old investment that was made back in 2015 that we're looking into now. So as I said, we're working with Sean and we'll update that, but that's one of the swing factors there, is that the fund manager there is imposing a withholding tax that we're looking at whether they should be or they shouldn't be. So.
Okay. Basically, as you can see, it's a difficult area to predict, but we are doing quite a bit of work on that to try and make it better. Are we happy to note the report? Yep. Okay, thank you. Right, we now come to the agenda item where we test that you've all read it. But clearly it's quite a meaty document. There are a number of things still to be added into it yet, particularly regarding audit. And I'll let Sean do a brief introduction before we go up for any comments. Thank you.
Thank you. So we've attached the draft annual report at Appendix A. I think most of you attended the workshop that we had a couple of weeks ago where we talked through it. So hopefully that was helpful background for looking at this document, which I acknowledge is very lengthy. In terms of process, the finance and governance parts of the pension team have drafted this with input from LPPI and LPPI predominantly. You'll recall from the workshop that there is a significant amount of guidance and regulation covering the preparation of the annual report, including SIPFA guidance. And we've made sure that we meet those mandatory requirements. In the cover paper, I did acknowledge that there's some content in there that you will already have seen or it's already been agreed at various points in time. And I've noted that on the footnote on page 34. There's also a lot of financial content in there, particularly in section H, which was the focus of the workshop, and some of the items you may be familiar with from when we had a discussion on the budget back in June. And then there's finally other content that will be of very much interest to the committee, such as the forward by the chair, the administration section on the fund and how the investments have performed. In terms of next steps, as the chair mentioned, there's an external audit going on at the moment with Grant Thornton, which is due to complete towards the end of the month. Any items that are coming back from that so far have been fairly minimal drafting items, so we don't expect anything significant. We've also just recently got the final asset pooling data, so we'll make a check on that before we finalise. And of course, the local pension board will give any comments that they've got on the reports at their meeting in October. And then the final point, we do go through a design process. So this Word document will be converted into something that is a lot more engaging and visually appealing to members and other individuals who would like to engage with it. Thank you.
Okay, I'll just bring William in now if he wants to say anything regarding the pension board details within the report.
You know, I've got no further comments, and we did discuss them at the last meeting, and I've got nothing more to say at this point. Okay,
open to comments. Alan.
Yeah, just a couple of things. The first one, if I had time, I would have raised it directly with the Director of Corporate Services, who's present, Laura Sales. But on page 4, overall page 40 of the pack, it gives, in the heading Management and Financial Performance, a whole list of people that are involved, and among which is quite a long list of legal advisors. I'm presuming that's still current. I was just puzzled by one particular firm isn't mentioned, who I know have advised or do currently advise LCC and LCPF, and that's DSC Beechcroft. Is that an omission? My other point to mention, I don't want to steal anybody's thunder when we come to the next item on the agenda on responsible investment, but I was particularly interested to see, because I'm chairing the present task and finish group on the ORI policy document, that within this annual report, there is quite creditable, in my view, coverage of that subject of ORI on pages, I think it's starting page 41 to 45, overall page 77 onwards. And for any members who are interested or should be interested in ORI, it's certainly at least one part of the annual report to read, I would suggest.
Well, Jennifer.
I thought it was a very good report, lots of information in there. I've given feedback separately to Sean, but one of the things that I thought he might mention when he just introduced it was about, and I say this each year, how do we get this information to our members and to our employers? Not all 100 and odd pages of it, but a little summary. But how do we actually get people to look at this and see how well the fund's going? And I did also suggest that in your forward, Eddie, you haven't crowed enough about how good the fund is doing. And I thought potentially we could say a little bit more about how well the fund has performed with LPP and so on, and perhaps just add a little bit more about that in there. But I really thought it was very good. And we just need to find a way to get these key messages out to the members and the employers. And they're not going to read the giant document, but it's just some sort of summary. Thank you.
Yeah, we've talked about this, and what we're looking to do is probably produce a 5 or 6 page summary of the overall position that with assistance from LPPA we'll look to send out to members and employers, without obviously all the background pages upon pages. I mean, we have to do an annual report. You know, it's part of the overall performance of the fund, but you know, I accept what you're saying, and we're looking to do something about that. with a bit of time to do that just yet. Councillor Dowding, yeah.
I'll raise this here. It could be here on the next item, but I think Councillor Schofield is right, and I'm very pleased to see that we've given this amount of emphasis on the activities under responsible investment, because a lot of, increasingly, I think members of the scheme are interested in that. I'll raise this point here because I've raised it so many times elsewhere, and I still think it's something that we should consider in terms of the effectiveness of what we're doing under this. And it's about the shareholder voting. So on page 84 of the page 48 of the actual report, we've listed how we've used our shareholder influence in terms of whether we've voted for or against various resolutions, company resolutions. But I think the interest from members of schemes is what difference that made. And so often, you know, we hold great store by our voting influence, and yet what's really of interest is what was the actual outcome, because all too often, no matter how we voted as shareholders, it hasn't influenced the outcome. And that's on that section there. And I think that also applies to the section activity by focus group in terms of all the things. It's like, well, what's actually happening?
Yeah, okay, I might let Chris give a comment on this. I mean, this is a particular area on the voting that LATFA get very involved in, and they do give quite a lot more detail and description about the different motions or whatever that they're voting against. And it might well be worth looking at the LATFA internet page to get more detail on that. But Chris, have you any comments on that, please?
Only very briefly. I think there's certain sections here which I believe are part of your kind of required reporting, how you have to put the votes out there as you have done. In terms of how you show cause and effect, as it were, there's an element of anecdote that you can tell in that you could consider in the report, because trying to do it scientifically to show exactly our vote did this and that's the following outcome, it's more easy to do that anecdotally than kind of scientifically, because of course there's many votes and who's to say what action is necessarily into which specific cause and effect. But certainly that's one of the things we try and pull out in the quarterly RI dashboard and the real world case studies in there. So my suggestion is that the annual report is a relatively constrained document in terms of you have to follow certain kind of parameters. But there's ample opportunity in, for example, the quarterly responsible investment report and other opportunities in the future to show those anecdotes in the future.
Sure, can I say it may be just me, but I could hear Chris a bit better then and make out what we're saying a bit better than previously. Is it possible for Chris, could it be a bit nearer to the microphone when you're next speaking?
Comments from anyone? We'll take on board the comments that have been made, and I'm not sure, do we come back with a revised version or do we put it on the internet? Just on the, yeah, okay. We'll maybe send a copy to the people who've made the comments and see what they think. Okay. So we're asked to review, which we've done, and subject to the changes, approve the document for publication on or before 1st of December. Okay, happy. Really, as Councillor Schofield has noted, we have a review going on at the moment. I think the review panel has had 2 meetings and is due to have a further one before they come back to the committee in November. But open to comments on the report? Yes.
Thank you. Yeah, so on page 5 or 205 of the overall pack, this refers to the previous point I was making, which I find quite alarming, given that it's a priority area for us, that we've got, this is a stewardship headlines, an engagement in the public markets, an analysis of how we're doing from success to no success, and under climate action, which I think is on everybody's top priority. It appears that no success, you know, we've got a big area there where we're not having any success. Is there anything? So this is like saying, are we doing the right things? Are we using the right methods to influence these companies? And if not, what else could we or should we be doing in all, you know, through LAP, through PERC, through any of the bodies that we use, if shareholder engagement and resolutions is one of the things we're doing to engage?
Yeah, again, I'll let Chris, I'll just comment from the LAPFA point of view in that I get a weekly report from LAPFA from the chair, basically on the engagement he has had and the meetings he has had with chairman, whether it's BP, whether it's Rio Tinto, whether it's Shell. And, you know, there is a lot of work going on in that area, and, you know, particularly looking at more defined subjects that we would like them to move on climate change, or, you know, some of the human rights issues with regard to mining in particular. So there is quite a lot of work going on that area. But I'll let Chris comment.
Yeah, hopefully you can hear me. I'll lean in. So I think it's a fair observation. I think what I'd add though is the other 50% is success. So it's one of the more successful and one of the more unsuccessful on those specific companies. There's also the kind of net zero carbon emissions one, which you look below that. For clarity, this is a summary of the longer Robeco report that you've seen. I'm not sure if that's been shared with the committee this time, but that's available every quarter, which goes into more detail on this. And I think it's a good thing that Robeco are being honest, as the individual initiatives they put in, they want to call themselves to account and say, have we succeeded, have we not succeeded? What also to add is where they identify a lack of success, that's not give up and don't do anything. It's, okay, why have we not succeeded? How do we re-engage in a different way, and how do we progress that? So I think the positive is that we've got a relatively rare high success rate there. If you look at the other buyers, then having 50% firm success is quite high compared to some of the others. And where they haven't been successful, that's because they, if you like, they put up the drawbridge after a certain number of years and say, look, that hasn't worked with that company. How do we change direction with that company and try a different tactic? And so there's much more detail in the longer quarterly Robeco report that you can refer to if you wish.
Yeah, just to say, the Robeco report is in the pension library, so everybody can access that. If anybody has any problems accessing the library, then please contact Mike and he'll point you in the right direction.
Thank you, sir. Just a very brief observation. I mean, I think part of the dilemma we have as a pension fund is that if we decide to work through LAPFA, then to a certain extent we increase the influence because we're working as part of a much bigger group. But it doesn't mean that we go at the same pace as that group can move. So we may individually as a pension fund get frustrated that we haven't been successful with a particular company, and the argument we need to accept is, does that lead us to disinvest or do something else, or do we stay within the family and let them try and bring everybody together? And my instinct is to say it's probably better to be part of a big group with a big amount of financial muscle and just accept that different funds will be intellectually working at different paces, and we just need to try and recognize that, however frustrating it may be. And, you know, if we can chivvy the others up, and that's perhaps something you as chair can help with, then that would be great.
Yeah, I mean, you know, obviously, when you pull all the local government funds together, we had an example last year where I think it was, might only seem a small percentage, but I think it was 3 or 4% of Exxon was owned by UK local government pension schemes. Now, we've begun to put an influence through LAPFA because they can take all the local government schemes together. And we've been quite successful in getting them to move on certain RI issues. And they've recently appointed 2 new members of the board who basically have quite an interest in climate change. So, you know, it's trying to use the influence in whatever way we can.
So if I may, Chair, very, very briefly, just say thank you for the report. There was at the very beginning, there was reference to also the priorities of the LAP fund meeting on the 14th of July. Although, and I'm particularly interested because this has been raised at a previous meeting about Israeli-Palestinian engagement. Are those papers in the pension library, or when it says you can request them? Page 186.
I think the minutes of the business meeting will be available. Yeah. They're certainly on the LAPFA website. Yeah, yeah. Okay.
I think we have come on leaps and bounds in the way that we report this. But one other thing, just to say, for example, our exposure in brown energy, 2.66% of our portfolio. It would just be good to know, and I don't know whether this is indicated on an annual basis, whether that's going down or going up on a, you know, some of these indicators so that we don't have to look at the previous report. Is that possible? Or is it there? It might even be there and I just haven't spotted it.
Yes, I think it is there. So if you look at, I can't see the page number. I think it might be maybe 207 on my pack, but that might be a different number. 202, sorry. There's a little chart on the bottom right-hand side.
Oh, the bottom chart, okay.
And you can see that the large majority of the brown exposures in the private markets rather than the public markets. And it's worth bearing in mind that most of that is not in the kind of extractive areas. This is in the midstream and kind of upstream, or sorry, midstream, downstream areas. So, for example, there's a large gas pipeline that we own in the infrastructure portfolio. That's in there. So it's not extractive fossil fuels, and that's something which is potentially can be repurposed into other uses in the future. So some of the brown exposures, they are trending down. But what we also see is obviously the mark-to-market changes can have an influence on those. So most of the recent quarterly changes have been more as a result of valuations of the whole portfolio going up and down, as opposed to transaction activity. So we haven't been selling or buying brown assets over the last couple of quarters. It's been more of a valuation issue.
And is that the same with the green? Because it looks like the total green's going down too.
Absolutely the same. So there's been relatively little. What you've seen is a very strong rally in the value of the overall fund, because you've seen general equity markets rallying very strongly. Okay. And so relatively kind of static values of those individual assets are smaller as a percentage of the overall fund, because the whole fund's gone up so much.
Right. Thank you.
Is feedback from members on pension related training, which has been fairly light over the current few months. But I know, I think, Chris, you went to a conference in Leeds this last week, and they are beginning to appear again. I think in terms of the 2 sessions, audit, risk and government, unless anybody's got any comments, Councillor Borrow.
Sorry, Chair, I just wanted to follow on your remarks. I mean, in the years I've been on this committee, I've tried every year to do at least 1 2-day conference or training session. I mean, I've got to be honest, pensions is a very dry subject. Spend it all day doing back-to-back Zoom conferencing on training sessions may have been easier 30 years ago for me. It's pretty tough now. And I do actually feel that I benefit much more from immersing myself for a couple of days in the pensions world, both in terms of the formal sessions and the informal side of it. So I've said that in terms of training generally. We've done a lot over the last couple of years on the internet, but perhaps for people of my generation, it's much easier when you're actually face to face and you've got that interaction with other individuals and you pick up a lot more. So I'm pleased that we may, by next year, be getting back to the stage where the opportunity to do that sort of training session is available once again. I think that would make it a lot easier. We've struggled, I think, doing the stuff on the internet. It's I find it quite hard work.
No, I think they're very good comments. I would agree with, and I would encourage members, as some of these conferences come up, we do have a budget to cover costs for them. There's quite a few where we actually have 3 places, but I would encourage you to get involved, you know, by talking to other people who are involved on a day-to-day basis in pensions. I think the PLSA courses and conferences are particularly very good and attract all the main pension providers to them. So please look out for those. Mike will send the details out on a regular basis and try and get yourselves on them.
Mhm.
No urgent business. I've been notified of any. The date of the next formal meeting is 26th of November at 10:30. I suspect by then we'll probably have a 10 o'clock start and we'll be picking a subject close to all our hearts, no doubt, to talk about. And then I've got to go for the item 11, exclusion of press and public. So we can just hang on a couple of minutes. If anybody wants to get a quick drink of water or whatever, do it now. Okay.